Hello and welcome to another video of The Secrets of Wall Street. My name is Jose and today we're going to talk about what happened during the market and what do we expect for the rest of the week. So today was a pretty interesting day. The markets for the most part really didn't do too much. So we're going to be talking about that. We're going to be talking about some news that really hit the market that I think is going to be very interesting as far as like general economic news. So let's talk about that. But as always, before, if you could like, subscribe, I would really appreciate that. It's a new channel, looking to see if I get a lot of subscribers to push out the word about this channel. So with that, let's get started. So today, we're gonna look at the general chart of SPY, and this is one thing I usually like to do just here on the channel is just take a look at the general market and see, get a better understanding about how the market is actually trending. So here we have a 5-year chart, and I just wanted to bring this up because there has been a lot of euphoria in the market lately. Obviously with earnings, obviously with inflation being lower than expected. Obviously 7.7 is not really anything good, but it's a first considerable downtrend in the market. So that's really what's been pushing these markets higher these last few weeks. So if we look at here, and I think one of the things here that you could actually notice is this was the COVID downturn, and ever since that happened, we had a major rally, probably and a multi-year rally all the way up here up to 480 on the SPY. And ever since then, the market has been hit with relatively bad news about inflation. So that's what you see here. Like there's been a general downtrend. It hasn't been a trend that's been very uniform in the sense that it's just been going straight down. But you've seen many bull markets within this general downtrend. And right now you're seeing one here. Now, the question is there any trend that this is like we're out of the bear market? The market is going to be forward looking in a sense that now that it sees a general downtrend in the market, will it continue to go up? My answer to that, at least in my opinion, is that no. The market in general has not anticipated the level of I guess a depression or economic recession that's about to hit. And you starting to see bits and pieces here and there, used car prices, housing prices, and now I think this week and these last few weeks, you're starting to see the major factors, which are job losses. So one of the bigger companies that announced layoffs today was Amazon, or that's pretty much reported. That hasn't been announced yet, but 10,000 employees are going to be pretty much laid off. And you start seeing that these companies, these major companies, are starting to reduce the number of employees that they have on their books, because obviously they're trying to limit the expenses that they have on their books because they don't expect as much revenue. So that's what you're starting to see now. Major companies are starting to start laying off employees. So that's pretty much what textbook recession looks like. So right now, when you look at the chart, you see that we've had a major rally from the lows that we actually hit around 350, and we've actually hit 400 today. So 400 is a very interesting number to hit, in a sense that we weren't expecting to hit that like a few weeks out. You told me like a few weeks out we were gonna hit 400 on a SPY again. I really wouldn't believe you, because obviously with all the news that's been going out, clear signs that the market is actually in a downtrend, that'd be pretty unrealistic. But here we are, close to 400. It closed actually 395, but you could expect the markets for the most part to keep going up until we see some more negative news. Not even the news of the crypto with FTX has really slowed down this rally. So pretty much what you see here is that this is could be a bull market rally, a bear market rally. And in this sense, you're probably expecting, you've seen now that the market has gone up for so many more weeks straight. I anticipate that the market is going to start cooling off a bit and start going down, because obviously a lot of this was driven because of earnings, and a lot of the companies still reported good earnings. So this is pretty much what my expectation. I expect the market to start going down again. So if you're looking to make plays and make money, some puts in some companies that you feel have overextended themselves a lot. If a good example would probably be Apple. Apple, if you take a look at now, the valuation of Apple is more than Google, Microsoft, Netflix, and Facebook combined. So you see that Apple has, even though it is a solid company, I kind of feel like it's probably a bit overextended. Probably one of the companies that you may look more long term to short, or make some put options to actually start making money. So that's just giving you a general idea about what to look in for plays. If you're looking for something maybe a bit easier, then SPY would always be the good bet. Some SPY puts, but right now options I kind of feel are very, very, very risky, because a lot of people are making bets, and remember, the market's always going to win. So they're going to find a way for you to lose money, and you could lose both ways. Right now, I think your best bet maybe is, if you have some plays that you're really looking into, maybe to buy stocks, is always a good time. Look, if you bought Netflix probably a few weeks out, you're probably up 40%, because right now Netflix has been doing pretty well after their bad earnings. So some companies overextended themselves as far as losses. Maybe Facebook would probably be another good play. I kind of feel that Facebook really isn't going away yet. So probably that's another good play. So if you're looking to buy some stocks on the cheap, probably that's a good idea. But keep in mind that the general trend in the market is still that it's going down. So I wouldn't put everything in one basket right now. A good strategy would be just to dollar cost average and start buying just little by little on these big companies, because obviously they're very, very discounted compared to their all-time highs just at a few months ago. And keep in mind that you're not going to expect these stocks to probably hit all-time highs for another maybe 2 or 3 years, possibly even more. So when you're looking at these sort of stocks, you have to play the long game, but you're gonna be into companies that have a good chance of actually reaching that valuation again in a few years. So your portfolio value, even though you may see a short-term loss, long-term most likely you'll see that the stocks is gonna start going up. So that's pretty much what I have for today. As far as news, I know Fed Brainer today, she's the vice chair of the Federal Reserve. She mentioned that she expects that interest rates will not slow down in the short term. So that gives just more, in a sense that we know that the market's going to probably keep going down, because high interest rates is not good for the markets. So if anything, you have any questions, your opinions as far as this, I would obviously love to hear this. As far as like plays right now, the market's very, very questionable right now. So stick to stocks like maybe SPY if you're playing options, or individual stocks that maybe long term would be better if you're going to probably play leaps. Don't recommend too many options right now, because the market is making sure that everybody loses. So that's pretty much the video for today. If you have any questions, feel free to leave them in the comment section. I'll be sure to answer them. So thank you.